Hi everyone, we're underway in about 20 odd seconds. I've just been chatting with the team in the fund meeting. They'll be in reasonably soon. I think most of them are still going, but they're not too far away, I don't think. Just trying to find my timetable in here so that I know where I'm going when we start. Oh, that didn't help, did it? There we go. Okay, well, I'm going to make it up and we'll put another one in there in a minute. There we go, that'll do. That one there will do. Cheers, everybody. Hi, and welcome along. It's good to have your company today for the Sunday market analysis, Trade Talk Radio, as we call it. Great to have you along for that. I'm just going to shoot out and see if I can get the right virtual background for this. There we go. All that is done. Gosh, the stuff can get... Right, guys, without further ado, let's have a little look and see who's joined us today. It's good to have you along. Hey, Lloyd. Hey, Alexis. Nice to have some presenters in the room as well. Hey, Gary, John, Mike. Good to have you along this weekend. Nice to have you in the room as well. Got a few on Facebook, I'd imagine. I would imagine I've got Mike keeping an eye on Facebook and YouTube as well. Look, I'm going to do a quick run through some charts and give you my thoughts on them at the moment, and then we will come back and get to Alexis to do some fundamentals, and soon after that, Julian will join us. A refreshed Julian at the moment, seems in very good spirits to take us through the market. We've got after that, Ainslie on gold, Shukri on cryptos. We've got Lloyd on currency, relative currency strength. Plenty happening today. We look forward to seeing all of them. Now, let me just see if I can get a chart up. And look, it's a bit of a weird time to be talking about some of this stuff. You know, they get a deal. I think the FTSE goes up. They don't get a deal. I think the FTSE goes down. So the FTSE at the moment, you know, we've just seen it, you know, I think we've seen it hesitate, bit of optimism, just settle and wait. And I think this market is really waiting for some kind of decision tonight. Still UK time, still maybe 12, 15 hours to go before we get a final decision on what's going on with Brexit. And really the probability of postponing a final decision is very realistic for these people. They do it all the time. One thing I know as a European in my history, Europe's always tried to make big announcements on weekends. If they make a big announcement on the weekend, we will have a gap in either direction on Monday morning, and it'll be large too. In any decision, we will end up with a large gap, I would expect, on Monday morning. NASDAQ, look, we were talking about this a little bit recently, you know, up the stairs, jump out the window, and probably ready to go back up the stairs. This area here will be pretty interesting. I'm looking for a retest of 12,464 and the previous high. And if we put in a high there and start pulling back, then that's a lower high, and we start to get pretty bearish. We break it, and I think we're heading back up to the highs to have a look at those as well. S&P, pretty similar stuff, really. We've pulled back. We've tested these highs. We've put a test bar and a test bar. Looks quite bullish, and above Friday's bar, I think you'd be long targeting this area here. Again, get a close below Friday's bar, and I think we're starting to head back down to 3,589 on the S&P. Look, Bitcoin on the brokers doesn't fall through the weekend. So this is the 11th of December date, and I understand that Bitcoin has rallied over the weekend, but it's not filling in our mind. Does anyone have an up-to-date Bitcoin price for me? Look, I think the same thing kind of applies here for me. This gap in Bitcoin is what interests me. You know, you get a close below this bar, and I think we're heading down to here pretty quickly. If you don't get a close above this bar, I think we're heading back up to test the $20,000 mark. Given what I can see, I'll be long above Friday's bar. Stop at the bottom of the gap and heading back to 20,000. It's about 1-to-1 if you get top of Friday bar, somewhere around there. Bottom of the gap, 1,106.45, I think, and getting back to 20,000. There we go, 1,606. So it's better than 1-to-1. And I'll be pretty interested in that trade. I do think the action will come on Bitcoin. I think it'll come around that $20,000 level, personally. Look, Ange will be back in to talk lots of stuff on gold later on. I think it's really interesting on a weekly chart. On a weekly chart, it's really clear that gold has put in a high, a low, a lower high, and a lower low, and right now it's setting up a lower high. And I'd have to say that I think technically gold is still short for mine. And again, this is where trading gets really interesting. So this is lower highs and lower lows, but this is a move up and this is a retracement. So which one rules? And look, for me, I love the longer, the stronger sort of stuff, but I think what you're looking for really is some price action to give you a bit of a tip here. And what we'd really like is to see a higher low, even on the daily chart. This could give us a higher low, and I don't love this sideways price action. I'd love to see it just pop back down and give us a higher low, maybe off this 200 moving average. Weekly pivot's going to move up to about here from memory. I think it's around 1845 here for the new weekly pivot. So price will be in between them, which isn't a great look. So that'll make a close above weekly pivot pretty bullish. And really for mine, a test down here, 200 moving average around 1800 looks still a possibility for mine. And if we've got a higher low there, I'd be pretty bullish. And below this low here, 1764, then all bets are off, and we are short as can be. Oil, again, I've been out of it because I just don't like the range. It's just ranging and ranging and ranging. And look, my long-term view is bullish. I think $50 is definitely well. I personally think $100 is very likely in the next 12, 18 months. But you know, at the moment, what's happening short-term is very bad for oil pricing. But no one's taking any notice of it. And they're all looking at the long-term stuff. They're pushing out the back contract prices, and that's pulling through to the front end contract prices. Bit of a concern for mine. I'm going to stay out of oil for a while until I see something a little bit clearer. I think if you're trading oil at the moment, you're trading reversion to the mean strategies. It does seem to come back to the middle every day for mine. Euro, well, you can't trade euro at the moment because, you know, Brexit's due out in the next 15 hours. We'll know a lot more about it then. Have seen a lovely move up, a little bit of a retracement, a bit of a push up. You know, if you couldn't see this bar, you'd feel like move up, retracement, move up on the way. But, you know, the lack of closes above this 128.48 level is a bit interesting. Maybe we need to get above 121.50 to really start to become bullish on this again. Again, I expect Brexit to gap it in either direction reasonably big. And dollar yen, look, it just seems whenever I look at dollar yen, there just always seems to be a new triangle you can draw if you really want to. I don't have the triangles on my chart. And the reason I don't have the triangles on my chart is I'm not actually a big fan of the moment. I might put one through here. So a lovely triangle that, and right in the area it should break out. But that's not what really interests me. You know, breaking by the side of this triangle is technically long. But what I'm looking for is this bar here and this bar here. You know, for me, this bar here put us into the range. We haven't broken out of it yet. This bar here, we established another range we haven't broken. We haven't seen a close above or below this bar since. And a close above or below this bar here, which doesn't get me pretty interested in either direction. Short of that, I'm not too interested at all. Aussie dollar continued to rally last week. Pretty good. Rightio, time to talk fundamentals with Alexis. Alexis, how are you?
Oh, hello. Hi.
Hi, Alexis, how are things?
Yes, doing great. All good. All right. Yes. Hello. Thank you.
What's going on fundamentally for us, Alexis?
Well, a lot of big news coming up. So I think next week is really like how you said. There is ECB news, Brexit news. So I think we will be looking at big movements or big jumps, either direction, I think for both the euro or the pound and the pound. So there's a lot of consolidation that's been happening. And I think prior to that, the pound actually had a big move downwards. I think it was mainly because of the so-called news that have been coming up that says that, you know, it's going to be no Brexit and stuff like that. So it is really curious to see where it moves. So I think last couple of weeks we have been focusing a lot on the pound and the Aussie. So I'm just going to do one of the pairs which really I think kind of showed like how fundamentals and with especially a technical help, it could really make it interesting to trade in that sense. So we had the pound Aussie over here, and I have been looking at the pound Aussie for the past couple of weekend Sundays for those of you who are in my fundamental Sundays updates. And what happened last week, you can see the big weekly candle down. The pound and the Aussie finally made a move somewhere. All right, and it really is a play on Aussie strength, and I think it just coincidentally went in our favor that the pound had a reversal due to the. For those of you guys who caught that, you know, really great. And I think it's another example of how the technicals really helped us keep out of spaces where it's like consolidating and sideways. So if we do actually move to the shorter time frames, I think the technicals really do help moves like that. So this was a nice move towards the downside. Now, next week, I am still looking at the pound and the Aussie. And really simply why I'm looking at the Aussie is because the Aussie has pretty nice stats. If comparatively amongst all the, the economic numbers and also in terms of I wouldn't say political stability. I'll just say the lack of volatile news. So Australia doesn't have stuff like the Brexit, the election handover, and stuff like that. So in terms of fluctuation, it's a little bit more stable in that sense, and all it's dependent on is whatever's happening in the country itself, as well as the tie-in to China's recovery. And the numbers are coming up pretty okay. We finally had a nice little green quarter over quarter GDP pop up 3.3%. So the numbers finally caught up, and it is reflected already. Wrong pair. And I really am looking at just pairing something a bit more stable. I'm not too pleased with the unemployment rate, still at 7%, but it's not a big jump as before. But if we just compare it to things like the UK, low interest rate, inflation, jobless rate, numbers look pretty good. So I don't think this move would be a long-term move. It really depends. The trading view now, I think, really is on a very sentiment base. The fundamentals don't really work at this point because it's very news heavy. So a lot of speculators and traders are actually looking at what's the decision for Brexit, what's the decision for the euro. So these numbers are kind of more for long term, because if the Brexit news is positive, and then these economic numbers will support the positiveness and give it that extra push to the upside. And if it's negative, if the economics are good, what it'll do is it will just give a little bit to the downside, and then it'll bounce up eventually, but it's over a period of time. So I think the focus here a lot is, while we do have the long-term view that some of the economies are slowly recovering, we are still far from back to normal, mainly because nobody's traveling yet, even though I think the countries are attempting to open up, but nobody's actually traveling yet. In Singapore, however, we had another GDP jump again, 9.2%. And I think if we went out on the streets, we really couldn't tell it's COVID. Everywhere is packed. I think people are kind of getting sick of being stuck at home. So domestically, the next story to look at is if the economy can generate enough domestic jobs for people, if they could kind of improve their unemployment figures domestically. I think that will be the next view, because we are having a problem like bringing people to other countries in terms of employment. So these economies are really depending on their own people to kind of sustain the job market. And it really probably is a race, in race to recovery in that sense, whether or not their own so-called citizens can fill the job market as fast enough. So we have things like the US, where the jobless rate, you can see, is steadily going down. Not too sure why, even though it's got really high COVID numbers, but people are still getting jobs. People are filling positions. Might be due to the immigration policies as well. Countries like, for example, Euro has a nice GDP, also very, very small but steady decline of unemployment. So it really is curious, because it seems like despite COVID, despite the like bad business, people are still finding jobs domestically in that sense. So I guess the next big picture over the medium to long term is, if the lack of travel is still there, then how will these jobless rates reflect on the economy, and whether or not these jobless rates can translate into GDP figures. Because at the end of the day, if countries can improve quarter on quarter in terms of GDP, we will see probably a significant shift in currency strength. But I think it's going to take at least until maybe mid-April or March, after the first quarter, to see whether or not the figures translate back into currency strength in any of these countries. Curiously enough, the US has very high quarterly pop-up the last quarter. So I'm curious to see what's the next quarter pop-up, because this again will kind of reflect post-election news. And of course, GDP, as you guys know, is a very lagged statistic. So the closer statistic to kind of look at is actually the jobless rate, and then the GDP will probably pop in a little bit later. So these are the two. Jobless rate is something I'm looking at, and to see whether it kind of translates into the quarterly GDP figures, to see whether it gives that economic pop that is required. If we look at what's interesting in terms of news, I found this article on Financial Times where this was done, I think, 2 days ago, December 11th. The euro had a slight rally because of the bond buying program. So you guys can just go Google it on Financial Times if you want to read about it. So the next curious thing is, on the back of the Brexit, what is the euro going to the euro side going to do in terms of post-Brexit? So I think the big news is really there, and we should see a big move on Monday, Tuesday, depending on what will probably be announced tonight, I think. Or if not, then I think it's just going to consolidate until something a little bit more clear comes out of the Euro UK market. So I guess that is more Ash's department in terms of what's happening in the UK. What we get here is a little bit of a lag news. So the pairs I am looking at fundamentally next week, it's a little bit of, it's actually mainly still the Aussies. The Aussies are at an all-time, where's my chart? The Aussies are pretty much very, very toppish at the moment. If we look at all the Aussies, you can see on the daily time frame, you can see they're all reaching its resistance level. So the next question is, will we be able to break through the resistance levels? All right. Or will we be looking at a retracement, which then again would mean more buying opportunities? So I am looking at more Aussie strength, but I suspect next week looks like next week might be a retracement week. So it really depends on the rest of the world, what news is going to come out. My focus will still be on the Aussie, is to see whether or not, if Brexit news comes out bad, then we should probably see this level broken and it will kind of go further down. And if I go on the weekly time frame, you can see it's really hitting a nice horizontal level here. So if price does break below this area, we could see it cycling further to the downside if there is bad Brexit news. If Brexit news is positive, then of course this will be a nice trampoline area for price to start to cycle back up within this range as well. Again, bear in mind it's the last month of the trading year. There will be fund managers adjusting their portfolios to kind of declare their profits and stuff like that. So we will expect certain moves, but we will also expect a little bit of, I'm not too sure if with everybody stuck at home, will there be a lighter volatility this year? We might see something different since everybody's not traveling and not having much of a overseas holiday. So I guess that's all for me. I won't be trading for the last 2 weeks. Anybody else will be trading?
Cheers, Lexi. How you doing? Yeah, I've been having that conversation at home as well, Lexi, about whether I'm going to trade over between Christmas and New Year. The last 2 years, last year saw the great gold rally, and the year before saw the great oil rally, and two really good Christmas, New Year periods. And I haven't decided as well whether I'm going to trade the break or have a break. I'm looking forward to having a break from the work, to be honest, but trading I'm not as clear on at this point. Thank you very much for that, Lexi. What's the resource you used there?
Sorry?
What's the resource you used there? What was the thing you're bringing up?
It was trading economics. This one?
Is it tradingeconomics.com?
Yeah, tradingeconomics.com, yes.
Looks really cool. I think that's worth keeping as a bit of a tool for you guys going forward. Look, next in the room, I've got Julian, last show for Julian for the year as the special guest. Ash, do we have you in the room as well?
I am here, mate. Yeah. I'm just doing some work, so I thought I'd pop in and see you guys. Say hello.
Mate, I was going to pop this section for you and Julian together. You guys going to do it together?
Why not? Yeah, I won't talk too much over you, Jules. I'll let you lead it.
Thanks, mate. I appreciate it. And please interrupt whenever you can. That will be really useful. Thanks, Paul. Shall I kick off? Thanks, Lexi, as well too. And also thank you, Paul, for your introduction. I almost had nothing to say after you've gone through all the markets, but that's brilliant. I'm sure we can find something in there. Look, I think the key things for me for next week, let's talk about next week, because that's, I think, the most interesting space at the moment is obviously the big B in the room. And we'll we'll try and figure out what's going to happen. The good news is that it'll be lunchtime New Zealand when that news breaks. It'll be around about, I guess, 7 o'clock Singapore time in the morning. So we're hoping to hear something by midnight tonight UK time, allegedly. And the world is clearly going to be full of roses, rose petals and fairy dust after then, and it will be fantastic. So look, I think let's try and get ourselves into the space where we can try and do some analysis, which is the key thing. And obviously the one market where we're trying to make sense of all of this, I guess, would be in the euro sterling. So let's try and have a quick look at what's going on there as being our key level. I'll try and get you guys all out the way here. Hopefully people can see the screen and sharing here. So if we go really looking for me, the weekly chart is the first point of call. There is, going back a few weeks, I do believe when Brexit first started to be exciting, there was a weekly trading range that had 93.20 as the high and round about the 89 even mark, somewhere down there as the low. And that range has dominated us. That's dominated the Brexit talks. First, it was optimism as something was going to get done and euro sterling came down. And now it's pessimism that nothing's going to get done and the euro sterling goes back up again. So key levels for me, right? So here's the thing. Number one, what's going to happen tomorrow when we open? Because the open should coincide sometime around New Zealand, sometime around the conclusion of hopefully this round of talks, that we have some kind of outcome.
Julian, you mind if I just jump on with some time? So midnight UK is 1 p.m. New Zealand, which will be 7 a.m. C.
Yep.
8 a.m. C. It'll be 8 a.m. C, 1 p.m. New Zealand, midnight UK.
Yep. Yeah, and I think there'll be rumours and all sorts of back and forth. We'll see. So it's important because New Zealand will be open. There will be a foreign exchange market able to trade. So when we look at this weekly chart, thanks, Paul, for pointing out the time. That's great. Key levels for me are this point here, which is the weekly low, which is about 89.80. And then obviously the big kahuna, which is the major support point at 88.50. So if a deal is done, I would expect the market to quickly go and revisit these two levels. Where it goes from there depends on the extent of the deal. But if it does go, it's going to go down there quite quickly, I think. Now, if no deal is done, which is far more interesting, what is going to happen next? Well, here's the thing. We actually have to have some fundamental information before we're going to trade much above this 92.50, 93 even area. And really, the to go to parity, I guess, is probably there on a Brexit disaster. That would be poor for the UK. There might be a bit of sentiment that could take it up there. But just bear in mind, and this is the reason why the market's trading the way it did on Friday, when pretty much as much information as we have now was in the market on Friday. Okay, it tried to go up and failed again. Okay, so the reason why it's failing is because nobody's actually really totally long of sterling. I don't know any fund manager out there, Alexa's point that she made earlier, worth their salt who is overweight in sterling at the moment. Literally, I don't think there's any. And we're coming up to Christmas. It's the reporting season when you've got to close the fund and tell everybody how well you've done for the year and how great and amazing you are. You will not impress your investors by telling them you've got an overweight sterling position. So therefore, nobody's got this right. Everybody is probably on the short side of sterling, which is the reason why this thing struggles to keep going up. Okay, because people are the other way round. So here's the thing, right? What's the surprise trade? The surprise trade will be a deal. If a deal's done, you've got the entire market, absolutely, short of sterling assets. The entire market. So I don't know, Ash, if you want to weigh in on that, just confirm. But my sense is here that position-wise, we're right now the market's not trading up in euro sterling because people just don't own it.
Mate, Ash's daughter just wandered into the room and he turned off camera, so I think he's just telling. There, is he back?
It's okay. No, she's gone. She's gone. Oh no, she's not. She's sort of here, but it's okay. I'm still focusing. Could you just repeat the last question?
I'll tell you what, Ash. I'll keep going for a little bit, and you and you run your recovery in the crisis that's unfolding. So Guys, just to repeat the
Can I ask you a
exercise here,
question?
right? Yeah, please do.
Why does a deal between two parties get one to go up and one go down? Why is a deal good for the euro or good for the pound?
Certainty. So two things, right? So a deal is good because a deal means that business doesn't have to rejig itself and start over. And so things sort of carry on as normal, and whatever that looks like at the moment in Europe, but things carry on as normal. And if anything, you then have the opportunity to base yourself within the UK to export to Europe under the same terms as Europe has itself. So it's possible that with some fine accounting techniques, the UK could become one of the cheap producers within Europe. So that's the overall thing here, right, is that this is a success story for sterling if there's a deal done, but nobody owns it right now because they'd be mad to own it. So the surprise is a deal, the way this market is trading at the moment, and if there is a deal, we are quickly going to strengthen in sterling. Don't know what that means for the FTSE. Ash will talk to that later on. You could make your own conclusions about what happens. But for me, I see a strengthening sterling very quickly, simply because people are underweight of it, massively underweight. I mean, not small, massively underweight of sterling. And they've been right for 3 years.
Let me see if I've got this. See if I can ask another question here. So it's good news for the pound compared to the euro. So the pound will go up versus the euro. Will they both go up against everything else?
Great question. So does that turn the sentiment around in cable? I think it does. Does that mean the sentiment in the euro gets turned around? Well, why don't we go and have a look and see where the euro is? Now listen, guys, seasonally, this time of year is a bullish time for the euro against the dollar, right? So the euro dollar should go up. What are we looking at on the weekly charts? Well, it's a multi-week breakout with a close. That was last week. This week, we haven't reversed that. We've sat here and consolidated. We're probably due another move, right? And if that due another move point follows through, then we could see us up to 124. That could take sterling, by the way, up to 140 against the dollar. Easily able to see that on a Brexit deal. Okay, so at the moment the currencies are looking good. These two currencies are looking good. Now the others, I'm less sure about. So there's some really interesting things happening in a couple of the other ones out there. Where I have concerns, I don't have dollar sing. Maybe somebody could share dollar sing in a minute, but so where I have concerns is around dollar CAD. You can see I've drawn a couple of lines in there. The way the price action dollar CAD works at the moment, it is a bear market. Respect that, guys. It's going down, right? We can all see that. This is the daily chart going down. And look at that breakout on Thursday. That was a breakout down and a down close. What worries me is what happened on Friday. We have to be really careful that if we don't take out Thursday's low, this market might start to reverse. Again, we're in the same thing. Alexis pointed it out, right? Look at this. Everybody in the entire planet is actually short the US dollar. Oh, that's a cool place. And so what are they going to do before Christmas? Are they going to leave the book open for 2 weeks over Christmas? Well, maybe. They're pretty certain about it and they've got the positions right. I also think the risk of a reversal for whatever reason, it could be anything at all, right? We trade above the high of last week in dollar CAD, which I think is about 128.30. And put a ring low in place on the weekly chart, I could easily see us run back 2 or 3 big figures over the Christmas season very, very easily for no other reason than everybody's got the wrong side of the boat. So here's my concerns. It's here. If you go look at some of the other currencies, it's even more dramatic. So I think the South African rand is another one that's got a really crazy oversold chart on it as well too. And also dollar sing as well too, guys. So domestically, look at the dollar sing chart. I don't have that. Paul, maybe we could, if I stop sharing, could you put the dollar sing chart up for me? And you'll see that that oversold pattern will be there. So bear in mind, at the moment, it is a bear trend, right? Dollar sing is a bear trend. We have to respect that. But the signs are there of a reversal. And when you get to the dollar sing chart, Paul, if you'd be so kind as to put up.
Sorry, mate, it's hiding from it.
No, you were there. You had it. Just keep going down to there. It is. Third from the bottom.
There it is. There, right? Got it.
Thank you. And if you could put a 4-hourly chart up, that would be great. Thank you, Paul. Okay, what's really interesting about the way that this traded on Friday is that it put a short-term reversal in place. You can see that big green up bar. That is a higher low formation. So there's beginnings of some buyers around looking at this, nibbling away. Your risk is that low there at 133.25. The reward is way, way, way higher. So is this the start of something different? Don't know. But this is how these things develop. Trends reversal start from somewhere. If you go back to the daily chart again, Paul, thank you. We have to be on watch for a ring low formation, which if we take out the high of Friday, on Monday, there will be a higher low on a ring low formation. There is every potential for the market to start something different. Now, at the moment, it hasn't done that. At the moment, there's nothing to see. At the moment, there is nothing to give you an indication that the bear trend is over. However, just be aware that we've probably run its course. It's just a question of how it works. Seasonally, I'll wait till New Year, but it looks like we may go early this year.
I've got another question for you, Julian, and perhaps for both of you. I know we haven't had much information so far, but so you're looking at a ring low on dollar seeing, which has been very, very bearish. Now, we almost forget, right, that we're talking Brexit midnight Sunday, right? But Monday, we've got electoral college results going in the US, right? Where Biden should officially be called the winner. How's that going to impact the US dollar? If we're looking for a turning point for the US dollar, could that be part of it?
Totally, I think it could. And again, would that news in itself drive a reversal in the US dollar? No, of course not. Would it drive a reversal in sentiment in the US dollar? Well, that's possible, right? And there's the difference. Okay, so fundamentally, sentiment-wise, definitely. Now, here's the other thing that's been going on that people haven't seen. Underlying this, when you look at what the currencies on the CME have been doing, open interest exploded last week. Right, you know, the euro, we had a look at that breakout, that close above that multi-week range that we looked at a few minutes ago. That was accompanied by a significant movement in open interest. Okay, so people are getting long now, new longs coming into the market, new breakout longs coming into the market. Seriously, guys, this has to work. All right, same in Aussie. Same, by the way, in the Mexican peso, same, by the way, in the Russian ruble, same, by the way, in the New Zealand dollar as well, too. Open interest exploded the last 2 weeks. That's very interesting. We are looking at commercial short positions in all of these markets. We're also looking at, for the first time for many, many weeks, an explosion in open interest, which looks to me very much like everybody's getting long in the last innings of the game, right? Last quarter of the game. So this is where I see the problems coming. Are they going to happen this week? I don't know. Are they coming in the course of the next month? For sure. I just don't know when it's going to start or what's going to be the catalyst. So be on watch. For the time being, we're trending up in all the currencies and down in the US dollar, but you've got to watch for those reversals, guys. They're out there. This is how trends start in the opposite direction. Thanks, Paul. Now, if you wouldn't mind moving on to gold, but I think you did a brilliant analysis of gold, actually, almost literally took the words out of my mouth. So,
well, you did say it earlier on in the earlier session, so I got some of it out of there. You know, we were talking about it 15 minutes earlier, so there was a little bit of it. Hey, we're going to go to Ash on FTSE now. We're going to do that at the end.
I'll be 2 minutes, and then Ash can have a quick go. I'll just go a quick round up with gold. Hey, look, the key thing, guys, and Paul nailed this, right? It's still a downtrend, team. It's been a downtrend for a long time. It's still a downtrend. The only thing that is going to be the problem here, okay, within this whole downtrend is it's been going on for quite some time, and it's lagging behind Bitcoin. It's lagging behind all the other currencies. So does that 1760, the place where the market bottomed, is that the bottom? Now, the issue there is, I think it could well be. What we need to see, again, we're looking at a new trend starting, is a higher low. Now, have we completed that? The answer to that is no. What we've done is we've bounced and we've consolidated. So I'd love to see another attempt at that, as Paul was talking about. We get the higher low formation, then we have more confidence something new is starting. Until then, it's still a bear trend, and you don't get confirmation really unless you look like a weekly chart that something a bit weird has changed if you get above 1875. So I'd love to see it go down to about 1800. Paul was talking 1805 in that area. I completely agree with those numbers. Just a little bit of a flip down. If it holds those levels, then I think we're good. Again, if we break 1760, 1650 is your number. and gold keeps going down. You know, don't forget that gold does not correlate too well with stocks until it does. So if stocks go down, gold might well go down. And it really is a sentiment-driven market. And if you look at the flows in the gold market, there has been significant outflows in gold over the course of the last 4 weeks, significant outflows in gold. Okay, people are leaving this behind because they can make a lot more money buying Airbnb. So that's pretty much it, Paul. Oh, one quick last thing about oil. Oil, I think, is probably topping here for the short term, somewhere around here, and need to see a reversal pattern. Not sure. It's been doing very well the last 4 weeks, right? And everybody can see that false breakout that happened that started this new rally. I wonder if we're running out of steam now and we've got to come down a bit. The real seasonal bullish time for oil is somewhere in Q1. I think, Paul, that's when we have a crack at that. I'm not sure we're going to go to 100 in Q1, but 60 for me is a lock. And I think we're going to get to 75 sometime between January and May of next year in the seasonal bullish time for gold. I think it'll surprise us all with how powerful that rally will be.
Do you think we might touch $50 before we sell?
I'm sorry, Paul?
Do you think we might sell $50 before we sell? Do you think it might have another little push up? Or do you think it's done?
Yeah, I don't know. Again, not too sure. Little nervous about it, the way it trades at the moment. And let's wait for price reversals before we can start to sell it. You know, it's a bull trend, and we should respect that. I just wonder if we just run out of steam here. That's all.
Cheers.
Because from a price equals time sort of thing, and also if you look at the way the chart works, it's sort of had its run now. But that's it for me.
Cheers, mate. Thank you very much, Julian. Always great to have you on the show. Do appreciate it. Now, let me see if I've got this right. Tomorrow morning, you are going to trade the Brexit stuff. You'll be around, so that if it's tradable, you'll trade it, and that'll go into your broadcast group again right around 8 a.m. Singapore.
Yep, I'll do my best to make sure I post my thoughts on it. Hopefully there will be some thoughts on it, because hopefully there'll be something interesting.
It'll be really interesting in the next few hours whether we start and see some different language coming out of them and some talk of hope. Now the first positive statement would start and get us a little bit more excited about the whole thing, wouldn't it?
I think that it would be I think it will be a joint statement if they're going to be getting excited about something happening. I think it'll be very tightly controlled. Maybe Ash has another view on that, but my sense is the news from here on in for the next 12 hours will be very tightly controlled.
Cheers, Julian. Much appreciated. Ash, any thoughts on it all?
Yeah, loads. My first thought is that tomorrow will be a red herring. I just think that everybody's expecting there to be an announcement over the weekend, but I think the most likely from what I'm getting is that they say we are going to keep talking. I think we're all expecting it to, because we have to remember that the actual deal isn't done until the 31st of December, and if there's a glimmer of any chance that there could still be a deal done, they're going to keep talking. They're not going to shut down talks, in my opinion, 2 weeks early. I don't think they're coming out over the weekend and saying that there will be a deal. And I say that with a quite a high amount of confidence. To my mind, I think the chance they get a deal by tomorrow is very, very low. And I think we are probably looking at weak sterling next week because of it. But the chance that they say that the whole thing is off, I think is about 50-50. And I don't think they will say the whole thing's off. I think overnight we're probably much more likely to get just some rhetoric about that there is something to kind of go on, and we're gonna kind of push the deadline. I mean, they've done it every single time in the last what we are on 4 years now anyway. So why wouldn't they push another deadline when we're so close to the end? I think Julian's point in the previous conversation about the likelihood that the deal isn't done until the 12th hour, I think that's probably the case. I think that we're probably actually not looking at until the 31st of December before we know whether there will be a deal done or not. And the logic suggests a deal will be done. Still, the logic, even given what the problems are, the logic suggests the deal is going to be done. And I wonder whether the stance from the UK's point is let's squeeze to the end and see if we can get just a little bit more. We're going to take the deal as it is. but let's squeeze to the end and see if we can get a little bit more. You know, let's really put the frighteners on them and see if we can get that. You know, so I think a deal's going to get done, but I still think a deal will get done. But I think it will probably be done right at the end. I still don't think that that this date is relevant. You know, I think they're trying to get it done a bit earlier, but I don't think it's going to happen. So therefore, if we think about seasonally, the pound is very weak next week. And you know, it would suggest that the pound continues to weaken next week, but I don't think it would weaken off anything fundamental. Actually, I think we're all expecting it, but I think it's going to catch us on the hop, and it might be that it weakens, but maybe not as much. So I think we can start to look at those ranges. You know, if it's near or at the top end of a range against a specific currency, probably not as attractive. But if it's got some room against the currency, then I think we can still trade to the downside. I think any pop to the upside against the Aussie specifically next week, yeah, you see that's a really good example. And I'll come on to the dollar as well, because the dollar would be one that I am bullish on for next week. So could you draw a trend line down there from the 23rd of September as the low? Coming up and extrapolate it right to the 27th of October. I think we see that. I think we see that price point. Nice little horizontal level down there as well. I think we see that price point, and that to me looks quite attractive as a potential opportunity for a short next week. Somewhere around about there. You know, either that horizontal or the next one up. I think both those areas could be of interest. And I'm bullish the dollar actually going into next week. I think the dollar has got one last hurrah. I don't think we're going to collapse next week. I think the dollar's at quite an interesting price point. I've actually taken a short in the euro dollar to express that view. And I've given myself some room, so I'm not necessarily expecting the euro dollar to collapse next week necessarily. But if it does, not collapse, but if it has a drift to the downside, then I will take profit on that, because I'm not expecting a protracted move. But I am looking for dollar strength next week, and that leads me to thinking pound dollar short is a trade for next week. I'm just looking at the COT data in the background, and I'm seeing the COT data. You know, the COT report. Yeah, it's short the pound. It's not that extreme, to be honest. You know, that the extremities of the short in the pound aren't really there. They're close. You know, we're getting close to extreme levels, but we're not really there just yet. The euro is a little bit more telling. The euro COT report is a bit more extreme for its short, so that's why I've expressed it with a euro dollar short. And the dollar is quite bullish on the COT report. And the thing is, this kind of brings me back to my other one with gold. I completely agree with Julian with gold. Now I haven't necessarily done as much research with the demand for gold, but the demand for silver has just dropped off. 7-year low in a demand for silver, in accordance with the Indian jewelry fabrication industry, which is the biggest jewelry fabricator in the world. And you literally could go right across the board and see how much demand there is for silver, how much the demand for silver has just dropped off within every single country. And gold isn't silver, but silver and gold have got this close correlation. So, you know, I think I'm suspicious about the seasonal run to the upside this year with gold. And it's kept me away from trading gold long. I won't trade it short, because the seasonal pattern is so strong, and it's so well proven and tested. So I can't trade it short. I won't trade it short for that very reason. But what I will do is look for a potentially a better price to go long on gold. You know, I still want gold and silver in the portfolio, but I'm not convinced that this is the bottom of this particular run. And if I think about my long dollar thesis, you know, I'm long dollar going into next week, and the lack of demand that we've seen for for silver and potentially gold. If we think about what would create that demand, and there's certainly less celebrations going on this year than there was last year. So that kind of drives me to think that maybe gold is not going to shine as much as it has done in the past. We might still get that upside, but I don't think it's going to be quite as elevated. So if what would be better from my perspective is that we actually get a sell-off in gold, then I'll look to pick it up a little bit later down the line, later down the track, and see if I can pick it up long a little bit later. But my general thesis for next week is for short sterling without any huge fundamental bias, except for the fact that there's still not a deal, and the seasonal suggests a short, so that's why I'd be short sterling. I'm long on the dollar, for some of it because of I think that the sentiment out there seems to be growing and growing for a long dollar, but also I wonder whether we're starting to get baked in. You know, the dollar's been so beaten up, the news is now known. So are we starting to get baked in? And therefore I'm short on gold without wanting to trade it. When it comes down to indices have got all sorts of issues. Actually, I mean, the FTSE, yes, it's going to have its own side story, and if the FTSE is to weaken next week if the FTSE is to have any kind of upside next week because of sterling strength, I think that upside is going to be relatively muted. The FTSE has outperformed many of its peers over the last few weeks because of pound weakness, potentially. You know, we see right across the board in Europe there is some weakness, and I think the no deal scenario affects a lot of those companies in the likes of France a lot worse than it would in the UK because of its international exposure. But I still think the FTSE is to weaken with the rest of them because, and I think global equities might struggle a little bit. We're starting to see a little bit more, to do with the US government going after Facebook. That could have a domino effect. It hasn't really taken hold yet, but that could have a domino effect. The fact you've got these monopolies in the United States, in Facebook, in Amazon, in Google. It's only going to take the Biden presidency to come in and say no more, that we're having that no more. And from what I read, that's the kind of character he is. So okay, it's yet to be seen. So we don't know what's going to happen yet, and it doesn't mean that we should hit the button for going short on these markets. But when we consider how far some of these markets have come, FTSE aside, Nasdaq's a great example. Consider how far that has come since the pandemic happened. The Nasdaq's under a lot of pressure, and they've gone after Facebook. And as I say, who's next? And I wouldn't be surprised if we see some further downside in the US tech because of a Biden presidency. And that's going to drag some of those S&P names down as well. So the S&P, I think, is going to be weaker. I think the outperformers in something like that would probably be the Dow. But I think that the Nasdaq and the S&P could suffer. I think probably January. I'd be looking at the weakness to start to step in. But I think that the US market is due a correction anyway, and I wonder whether that could be the catalyst. The other one that I find quite interesting is the Aussie dollar. The UK, we've got a lot of issues going on right now with climate change. The UK has already said that it's not going to be funding any further fossil fuel exploration overseas. Now, the Aussie's economy obviously has got a big connection with fossil fuels and how they manage to kind of power many parts of the globe with fossil fuels. And I wonder what will that mean for the Aussie going forward? And I haven't done enough research and enough looking into it to kind of get an absolute opinion on it. But that was the first thing that I thought when I heard that statement. And when you consider what's going on in China and Japan, in the United Kingdom, right across the globe, there is this push for green energy. And I don't know where Australia sits on that, but I do know that they weren't allowed to speak at the climate change conference. And you start to wonder whether that actually could be because their economy is so heavily based on fossil fuels that it's not good for them to kind of push this program at this stage. And I wonder whether that could affect the Aussie dollar, going into next year.
Cheers, Ash. Thank you very much for that. Is that for you?
That's it for me, mate. Yep.
Cheers, mate. Thank you very much. Let's have a look at Bitcoin with Sucre. My understanding is Bitcoin's rallied over the weekend. Let's check with him. Thank you very much, Ash. Julian, Alexis, for the first hour, we are heading well into nearly at the start of the second hour. We still have got Shukri, Ainslie, Lloyd to come, and Geoff, of course, do some technical stuff for us as well. Shukri, are you with us?
Yes, I am. And it dumped and it pumped again, as usual. Now, my question for you all, because you are going to see this again and again and again and again as we go towards this journey up, is this. This was the FUD again. Fear, uncertainty, doubt. We talked about it last week. So this week, I don't know, maybe they're angry because of Brexit. Hey, they declare war on crypto anonymity. This means that you can't transfer to a wallet if you don't know the owner of that wallet. So the French, this was brought out by the Coinbase guy, which caused a dump. Then the French decided to do it, and that caused another dump on Bitcoin. And this is quite a big deal. No, now for me, it's not a big deal because I like regulation. I think with regulation, the Singapore comes in, right? And in Singapore is strict, but look at this. DBS in Singapore to start a members-only digital bourse for crypto assets. So I love regulation, but a lot of people don't like that. And let's see where Bitcoin dumped. And it dumped, and we've learned about this before, okay? Where did it dump? It dumped to the same place. How come it doesn't come out? Okay, it's taking its time to come out. Yeah, there it is. Okay, guys, look at this. Now, I want you to look at these two bars. Yeah, these two candles here, these two bars here. This is the weekend, and this was also the weekend. If you take that out, guess what? You had a gap. There was a CME gap here. This was the first Coinbase FUD. Oh, it blasted to that. This was the French FUD here, right? This was another gap, and look at the support there. Smack at the support of the CME gap. Now let's look what happened, and let's ask Paul the magic question, because we asked Paul last time, right? Do you consider that gap closed? You said, yeah, it closed. It's been there many times, maybe because of technicality. It didn't actually reach. And look what happened after that. It just went up. Same thing, Paul. It went down there, but it quite didn't touch it, but it's done it twice. And look, it rebounded off that.
I'm okay with that. Yeah, I'm okay with it. Yep.
Yeah, so it's doing the same thing, okay? Not one test, two tests. And let's look at Bitcoin. Yeah, it's doing very well. It's up again. Look, guys, 19,200. So, the fact is that when we're going forward, there's going to be a lot of these. And of course, when Bitcoin goes up, Ethereum also goes up. And let's see. Now, the good thing about this is that this is what we didn't see last time, okay? This is that we didn't see last time. The smaller coins did better than the bigger coins. That means the smaller coins were holding their own. Like this one doubled. This one doubled during this so-called correction. So you can see that the crypto space is getting wider now. So I think that that's really good for us. But again, the lesson today is very, very simple. There's going to be a lot of fun. I hope someone says something else so it comes down a third time so that you guys can buy it, because people have been asking me again and again and again, where do I go into Bitcoin? And my answer has been the same: on a dump. There will always be a dump. Now, the bad news for you guys is that there's already two dumps. I think this goes, and remember that on December 18th, 2 years ago, it breaks the high. I think this will break by Christmas, before Christmas. We get past 20,000. We come back, retest, and then we are off to the races. And that's my update, Paul.
Cheers, Shukri. Thanks very much for an interesting time for Bitcoin, mate. There is that big gap in the charts, and I do find it really interesting. I don't see this clearly on your chart, but there's a really big gap on the daily chart, and we've tested the top of it a couple of times. Close below does suggest we were going into it, but really for mine, that looks, I'm with you. Well, I'm partly with you, Shukri. I think we're going to 20,000. 18th of the month and 20,000 after that, I just have no idea. But 20,000 before the 18th of the month, I think is very, very likely.
Yeah, it's like it has to do it, like when it was at 13 something, at 12, it had to break 14. This thing
I've got to say, I never like to say things have to happen in trading, but if you bring your chart back up again, Shukri, if you can bring your chart back up and put it on a monthly chart for me, that'd be great. Let me talk about something just really briefly before we move on, right?
Sure. Okay,
So
let me bring out
you
the
get a monthly.
Yeah, sure. Let me get it here and
The Black Friday special on
slow.
yeah, it's not filling here. Well, the point I was going to make
Yeah,
is
there
that
it is. There it is.
so if you brought 2 years ago in December,
Yes.
the only time you've had a chance to get out for break even is in the last 10 days. And I have no doubt that people did. I'd imagine people brought up here and they have been, boy, at 4,000, I will tell you, they were crapping themselves. And those that have held have gone, okay, as soon as it gets back here, I'm out. I'm done. This thing hurt me, right?
Yeah.
So I think to see some selling around this level is pretty obvious. If we hadn't seen some selling here, I'd have been really surprised. So I would expect that these guys that got caught 2 years ago, a bunch of them have just bailed out, and they might come back in, but right now they've gone, boy, I'm so pleased to be out of that. It's ridiculous. So some selling at this level, I think, is pretty likely. I do think a retest of 20,000 is coming, and we'll go from there. Cheers,
Something else, something else very interesting, Paul. I just talked with this Frenchman. He's in Malaysia on quarantine now. He sold some property in southern France. Now, this guy is over 60, okay? He got some cash. The first thing he did, now he holds gold, he holds euros, obviously, and the US dollar. He put a lot of money in Bitcoin. Again, why? He wasn't thinking about the moon. He said, where is it going? Really? You think it's going to 100? I didn't know that. I put money in Bitcoin because I want something different. It's just a diversification of an asset class.
Yeah, it's certainly a hedge on risk, isn't it? And you've got to say that, and just in talking in general terms, that, the kind of things that used to upset financial markets once a decade now upset financial markets once a year. And having something in some different places does make some sense to me. Obviously, these things are decisions for you guys to make at home on your own. But personally, for me, I will be looking to put a bit more into crypto not too far away. Rightio, thank you very much, Shukri. Let's talk to Ainslie. Ainslie, gold is the topic of the month.
Hi, how's it all going?
It's going pretty well. How about you?
Good. Bit of a slow week last week, but that's okay because we had a bit of a consolidation on gold last week, and that's okay. And it's not, gold isn't behaving anything differently to the way it was last year. Very, very similar in terms of the movement and how it didn't. We were expecting November for it to go back down and to go down and to go down, and it did have a small retracement during the week, but not anything huge. And as we all know, that 16th of December, which is coming up this week, is a week that I like to look for. So every year I like to look for that. But let me just grab a screen. I'm just going to pull this one up, share this. And what we've got here on my daily chart, we've had this beautiful ring low and a bounce from here. And what we've had for the last week is a lot of levels being hit, a lot of the 200 moving average over on the 4 hourly. We've got the 50 moving average over on the daily. We've got a few things all being hit at one time, and that's okay. I'm okay with that for this time this year of the year, for this to be moving within here. What we didn't have, which is what I really like, is on the monthly pivot. We didn't have a close below the monthly pivot. And whilst we do have a downtrend, a preceding downtrend, we have had a reversal here. 1825, if you can see it a little more clearly over on the left-hand chart, which is my 4 hourly chart, 1825, we've come to visit that 1, 2, 3, 4 times. It was resistance previously to that, so it's clearly a strong level. It's now, the 4 hour is now, it didn't close below on the 50 moving average on the 4 hourly chart on Friday. And I'm sitting waiting and holding my breath because I know the guys have a slightly different view from my overall bias for this time of the year, because I really like this time of the year. But all I can say is it's a bias. We've got to still rely on price action and see where it goes to from here. Now, I was reading, and Shukri has touched on the point as well, that a lot of people are diversifying into Bitcoin. They're not putting as much money into gold. Gold is not as shiny as it used to be. Where I see the contrarian thought process with that is, whilst Bitcoin is getting more, and we've used gentrification and more popular and more understandable as something to trade, what we also have here is gold is proven, gold is safe. Not every hedge fund is run by somebody under 30, so gold is still something that some of the older hedge fund traders like to see. And we're just starting to see the tip of the iceberg with France putting some regulations in. And we saw a couple of weeks ago the passport number that needs to be put on your wallet to be able to trade. What we're seeing is regulations coming in, more and more regulations. I know 10 years ago, Bitcoin was, or 5 years ago, Bitcoin was the currency of preference for the drug lords or the arms dealers or whomever. It was people who wanted to stay under the radar and quite a well away from that. But I think as we see that going in, you still have the case for gold to be the safe haven from the currencies. We've got Brexit this week, we've got Brexit, we've got the Federal Reserve, we've got, you know, trade wars, and the trade wars, unfortunately, between Australian dollar and China are really, with the Aussie and China, really ramping up at the moment. So that's a very tender subject. Unfortunately, trade wars, China every time I pick up the paper every morning, China is putting tariffs or bans on this resource or the next resource, wine, beef, barley, lamb. It just keeps going. I think a couple of weeks ago, there were a lot of lobsters running around a port in China as well. So whilst we've got all of that happening, and we've got US dollar doing this, and we've got Brexit doing that, we have gold, and it is a seasonal strong point. We just have to watch the price action. I've got the wind at my back at the moment. We've touched on 1825. I would like to see it continue. I've enjoyed, as you can see, this run up here from the ring low. I jumped in on the reversal there, and we're up to here. It's not surprising that it's bounced back off this level. 1875, I think we're going to go straight back up to 2000 again. But more importantly, I'm looking at this monthly pivot here, and it's stayed firm. So all I can say is there was nothing to add to our position last week. We're covered with really strong, really profitably leveraged positions as far as stop and all the rest of it that goes as far as management goes. And we'll see how we go moving forward this week. It's going to be a very interesting start this week. And that's me on gold.
Cheers, Ainslie. Do you want to have a look at oil for us, please?
Oil. Oh, my charts are moved around. Where did it go? US oil. Here we go. Trading, that's been a load of fun, hasn't it? That big spike there was the boys were playing nicely in the sandpit. So they agreed on restrictions being held over in January. So they're not going to flood the market, even though some of the countries still wanted to do it because they've got to keep those wells going. They've got to keep things moving. But we finally got agreement, and off it went because the restrictions are going to keep everything in place. What we've got there as well is we've still got a lot of economies shut down. Or even in the prospect of more markets shutting down. So the Northern Hemisphere is just in winter, COVID mad, but let's see if we can get some more. Pfizer was acknowledged and approved through the states, and they are hoping to start jabbing people with COVID-19 vaccines in the states next week, I understand. And if that can help slow their mortality rate and their infection rate, then that in itself is just fantastic. But I think as that moves on and the numbers that they hope to and the rate at which they wish to vaccinate people will also bring a lot of confidence back into the market. And I think we'll start to see oil as it moves up as markets open, and it's got to be after Christmas. It's not happening this side of Christmas. Are we going to see $50 before Christmas? I doubt it. Q1 is when is a seasonal trend, and I've said this before, we look for a nice seasonal move up with oil in Q1, and that would probably tie up with what's going on fundamentally, and the pandemic and the opening of airlines coming back on board, and people starting to travel, and economies starting to open as more and more people are getting vaccinated. As you can see on the weekly, it's pretty obvious it's a nice little uptrend, and that's not to be ignored. But it's one of those things. I love trading oil. I do. It's just skittish at the moment. I can't get a clear cut unless it's some good news or unless it's some bad news. It just is skittish, and because of that, I'm just on the sidelines at the moment. But I wouldn't be surprised if we start to see it heading up towards 50 and beyond going into January. But at the moment, I'm sidelining it for the time being. And that's me, Paul.
Cheers, Ainslie. Thank you very much. I think it's fair enough on oil too. Be interesting to see. Look, it does have that look about key week for oil, for gold, doesn't it? The oil stuff, I think, is a wait and see. But gold, we're looking for some quite specific stuff from it this week, aren't we?
Yeah. Like I said, this is a big week for me. I probably won't sleep a lot. But we've had a nice pullback during the week. But it's also been supported by all those levels. I've seen it go up and touch the 20, the 50, the 200 on the 4-hourly chart, and all the pivots and everything in between. And it's acting exactly the same as it was November, December last year before we took off. So
we will watch it with interest.
Yep, absolutely.
Those in your broadcast group, I have no doubt, will get plenty of information as to what's going on there.
Yeah.
Rightio. Next for us is Lloyd on relative currency strength. Lloyd, are you with us?
Yep, I'm here.
Buddy. Cheers, man. I'll hand over to you.
Let me grab the screen. Good afternoon, everyone. So just updated my charts. Yeah, looking at some interesting levels for the week ahead. So I'm not actually on the weekly chart for all the currency strength, since it's going to be the last show. All right, so for Kiwi, undoubtedly I'm going to be bullish about it. It has broke a very strong level 70. So in fact, for last week, we can see a test bar and pricing actually closed below 70 from last week. So it ends up as nearly an engulfing bar. So from that, I'm going to be pretty bullish about Kiwi. I'm going to be trading it all the way up to the 75. Yeah, so huge growth potential for that. Now, Euro, you can see pretty similar scenario as Kiwi. Broke 120 after a prolonged downtrend. Price went up, first retracement, and then broke 120. Yeah, so we end up as a doji bar from last week. Yeah, so but for most of particularly for me for trading price action, if I see an impulse bar followed by a doji bar, usually I'll interpret that as a continuation. Yeah, so I'm pretty bullish for Euro also. Now Swiss is the one that I'll be pretty careful about. Yeah, although it also closed above 110. Now, to me, this is a very catchy close. You can see that it hung around this level for quite some time. Moreover, for the latest weekly price action, it ends up as a test bar. Let's look at the daily time frame.
Lloyd, can I just ask for people in the room, right? What you're showing us is the index. So this isn't dollar Swiss or euro Swiss. This is a combination of everything against the Swiss.
No, this isn't a currency pair. It's just a weighted index for that particular currency.
Great. So it's not dollar Swiss. It is everything versus the Swiss, weighted with the one with the most volume being given the most, like the dollar index, where there's a number of different currencies in the dollar index, but the euro is heavily weighted in the dollar index.
Yes, you're right. So it's like all the currencies versus Swiss, all other currency versus euro. When I say all other, it means usually the majors, does not include the exotics or minors.
Cool, mate. Cheers. Thank you.
All right. So from a Swiss pair, you can see from pretty much trading last week, the Swiss index, it doesn't really have much of a bullish price action. Yeah, so gotta be really careful about trading Swiss. Although as of now, I'm bullish about it, but given that the weekly bar has bar, suspect that it might have some retracements. Yeah, so looking to see if we'll actually retrace to about 111. So let's keep a look up for that. Aussie is actually the currency that took me by surprise the most. Yeah, I didn't expect it to be that bullish. I mean, it had a really nice bounce off 70. Yeah, and then after that, it just continued on a buying spree. Yeah, so as of now, it actually closes above 75, but it's only a very slight close. So let's have a look at the daily chart. We can see it's having a very slight close only. So in that, from that, I'm actually pretty cautious. I will be waiting for some sort of retracement, at least a 1 bar retracement before I put it in long positions. Yeah. Other than that, my sentiments for Aussie will still be towards to go long. Now, for the pound currency, I'll probably be staying out. Yeah. Although I do mark out the horizontal level at 140 and 120 and the mid level at 130. Here's the thing, I just cannot ignore this level. Yeah. And even from the past, price has interacted with this level quite a few times. And then if you see the recent weekly price action, it touched pretty long wick and then followed by a high test bar. Yeah. So with that, I think price from what the indication shows will go down to 130 at least, and from there we'll see how it fares. But in all honesty, I would rather be staying out of pound for the moment. CAD is also another currency to be on the lookout, cautious. In fact, no doubt is being bullish, or you can see that on the weekly time frame, it has printed a high test bar. Let's have a look at the daily time frame. Yeah, we do see more bearish bar instead of bullish bar. So usually that will tell me to be pretty cautious about it. In that, I'll be waiting for some sort of retracement up to this level, and then I'll be putting in long positions. Yen is pretty messy to me. Yeah, so on the weekly time frame, you can see that it has very, very ugly long wick tails. Yeah, so for Japanese yen, I find it particularly hard to trade for the last 2 weeks. The prevailing momentum you can see from this trend line is that it is still bullish. Yeah, just that on the lower time frame, I think it's particularly hard to trade. Especially when you zoom out the daily, we cannot just ignore this level. You can see that price actually did reject from the past, broke up, gap down, hug around, gap, come down again. Yeah. So for yen for this coming week, I'll be really, really careful about it. Until it closed really bullish above the horizontal level, I'll be ignoring yen. A dollar among the rest is the only one that is on a clear sign that is bearish. Yeah. So we can see most of the currency I would still be long against DXY, US dollar. Yeah. On a daily time frame, you can see that price seems a bit reluctant to go to 90, and we can see pretty bullish price action around here. So I'll be expecting US dollar to actually at least retrace back to the trend line before continues its downward momentum. So that's about it for me.
Cheers, Lloyd. Thank you very much. Much appreciated. Always interesting to see your segment in this. Also interested to see a few guys on the room talking about dollar strength, seeing the height in the dollar's taken recently. It just looks like we might be at a bit of a bounce point for the dollar. Rightio, next up we have got Geoff doing some technicals. Geoff, how are you? Geoff?
Hello, can you hear me now?
Can hear now, mate. How you doing?
Yeah, going well, mate. Thank you. Busy day, busy weekend, but other than that, looking forward to a cold beer.
Mate, we got 4 charts to do with you. Then we're going to wrap this up and go to a staff meeting. And after that, we'll have a quiet beer, eh?
Yeah, sounds good. I'll be in that. Righto, look at, this is going to be very, very repetitive, I believe, because it's very much one and the same thing. The first thing I would say is euro pairs, pound pairs are off my radar at the moment. That may change given what may or may not happen in the next, I think there's some sort of an announcement. Sorry, I haven't been tuned in. I'm sure you guys have been talking about this. And I'm sure there's some sort of announcement or decision pending due to be released in the next day or so. Maybe that's overnight. I don't know. However, that remains to be the determining factor, I believe, for euro and pound pairs for the coming week. And I won't speculate on what may or may not happen during the course of that announcement. But it will be interesting to have a look at a trade thereafter, one would think. But in the meantime, euro pairs, pound pairs off my radar. And Aussie pairs, I suppose, are the ones that I'm concentrating on most of all, not because I want to trade them long, interestingly, because I am extremely bullish the Aussie, but I think we are at fairly strong resistance levels pretty much across the board on the Aussie. And I've chosen the Swissy here, and I'm also going to go to the yen in a minute, which really are diametrically opposed currencies, are they not? The Aussie very much a risk-on currency, the Swissy and the yen very much risk-off currencies. And I think that's probably going to be our litmus paper, if you like, for the week. Now, why are we risk-on? Well, you'd have to ask someone with a higher pay grade than me why we're risk on. But it's to do with, of course, the COVID situation, in my humble opinion, where we are seeing vaccines administered to people. We are seeing hope. We are seeing light at the end of the tunnel as far as COVID's concerned. And the market's reacted to that. And that's pretty much why we've been risk on. That's why the Aussies rallied, apart from their economic numbers, the fact that they are going to come out of COVID far better than most other countries, et cetera, and Kiwi similar. But from a technical perspective, I see right now that the Aussie, and as I say, versus the Swissy and the yen in particular, is at a strong resistance level, and indeed the top of my range. If I looking at this weekly chart on Aussie Swissy, not only do we have the top of the range, we've also got this trend line on the weekly chart, which is a pretty strong trend line. We've just poked our head above that, which is interesting. But there's also a strong horizontal level running through here as well. So what I'd be expecting to happen for the week, and not necessarily tomorrow, is that we come off this level and we put in a lower high, and we're able to trade it down to the bottom of the range. Now, I've tried to do this during the week, and you'll see a repetition of this. Thought that was a nice bar to trade, bouncing off the weekly pivot last week. Of course, we didn't even get a look into that. Such is the strength of the Aussie and the appetite for risk in the market at the moment, that we didn't even get close to an entry on that one. I'll be looking for exactly the same thing. I'm not sure where the weekly pivot will be tomorrow, but it's probably going to be around this vicinity somewhere. So what I'd like to see, of course, is price get underneath that and then bounce off it from the retest to the low side, and then we can trade it down to the bottom here. Not really interested in trading any further than that, because I am, as I say, very, very bullish the Aussie currently. That won't stop me trading short, of course, because we're looking at trading structures and technicals, not what we hear in the news. So that's Aussie Swissy. How do I think I'll find an entry? Well, I don't think it'll be anything other than what, well, it could be. It could be if we go long here and get above this horizontal level, but don't close above it, come back underneath it and retest it. We may well get a false break off that trade line or trend line, if you like. That's on a weekly chart, but it could, of course, happen on any daily 4 hour, whatever the case may be. In fact, I think the 4 hour is probably quite interesting at the moment. We do have a rejection bar there off the top of that range at that horizontal level. So again, watch where the weekly pivot, probably due to bob up to here somewhere, I would imagine. If we can get underneath that and retest it with a lower high, I think that would be an admirable place to get into the market on Aussie Swissy. As I said, this is going to be a little bit repetitive, and Aussie yen is very, very similar in nature, not necessarily in chart structure. We do have a structure here that suggests that this will break and go to the high side. I'm sure most of you recognize what looks very much to be an inverted head and shoulders here. Offset right shoulder, yes, no question. But we've been unable, rather, to break the neckline, in my humble opinion, unless, of course, you want to call that the neckline. Some people would. I don't necessarily subscribe to that theory, but we have broken that, but it didn't hold. We came straight back underneath it. Now we've gone again. So to me, this structure here, the ascending channel, has far more validity than does the inverted head and shoulders at this point, until this level here, which is, what is it, 80-40, let's call it 80-40. And until that goes, then I think I'm just happy to trade inside this range. It does look fairly sustained now. We're going back to 2019, coming off that double bottom. That failed, I've got to say. And then we've got this inverted head and shoulders that at this point in time is not developing as far as I'm concerned. So I'm just happy to trade the range. I think eventually this target area here will be super. And I think that's probably where we'll give the decision on whether we're going long or short. But in the meantime, I think we're just going to range in here until that level happens. What I would say, if we get down here, I'd certainly load up if we got a higher low, if we come off the bottom here, because I think that level would be far too juicy, if you like, or far too attractive for buyers not to go to. So I think 80-30, 80-40, as I said before, if we can get a big retracement back to the bottom of that range, I think that would be an excellent trade. Aussie yen long at that point, but there's a lot of water to go into under the bridge before that happens. If I'm talking price in time, we're talking 16th of May, 2021. How's your patience level? Just trade the range until that happens. It would be my counsel. Where we find an entry on that, of course, is very, very similar to what I just described on Aussie Swissy. Watch the market sentiment on this, because if we go risk off, then I think this is an awesome trade to take down to the bottom here. But if we remain risk on, I think you'll see the Aussie break out to the high side of here. And if that's the case, then we're going to have to wait until we get back into that range. So just be aware of that. It could easily break to the high side, but watch for the re-entry into that level or underneath that level, and then look to trade it down to the bottom. Ultimately, similar to Aussie Swissy, we do have an ultimate target up here. So trade the range until then. It's not that difficult from my point of view to what happens next. I've kind of got that mapped out for my trading in the next week, maybe 2 weeks, maybe 3 weeks. Gee, I'll get a break at some stage, I think. Swissy yen, not dissimilar again to what we've just witnessed in terms of my analysis. We are at a strong horizontal level, and we're going back to where 2017, since this range began. Took us a while to get down to the bottom, it must be said. We had 2-3 hits at the top, then we came down to the bottom, had 2-3 hits at that before we went to the top. This is the second hit at the top again. Do we have another one? Maybe we do, I'm not sure. But that's the monthly chart. If we go back down the time frames, you can see how strong this level is. And 1, 2, 3, 4, 5 pumps on here is enough for me to say, well, okay, that level is not really enticing to the market. They don't really want to get above there. So again, one of two things I'll be waiting for. First one, price to come off the top, give us a lower high, and look to trade it down to the bottom of the range. Second one, we break out of that level. And I'm trying to go down the time frames a little bit here to give you some indication as to how I will look to trade that, but it'll be absolutely exactly the same as I've just described on the other two. Break out of here, come back into the range, look for a lower high, and trade it short. Would I be, well, I'll write it off really if it goes and retests here. I've got to wait to see it come back inside that range before I look to trade it back to the short side. Why would I think it isn't going long? Well, to me, it's pretty clear that since what, 2013, we've had one false break of that level. Okay, it lasted 3 years up here, but really it just doesn't want to go up there, does it? It's pretty clear to me that that level is super strong, and we're pretty much at it at the moment. So I'd really like actually price to break out of that range, then come back in it, and then look for the lower high I think that'd be the perfect trade for us. Swissy yen. Now, finally, I'm going to go with Kiwi CAD. Now, Kiwi CAD, I tried to trade this last week and failed. Got in a sticky situation with a bad entry, but I'm pretty keen to trade this again short. And I know there's not much to go by here in terms of, okay, what really is going to drive this short, given that very, very bullish bar here and the market sentiment with the Kiwi, got all that. But if oil does rally and continues to rally, then I think the CAD may have better credentials than does the Kiwi. It's not there just yet, I've got to say that. But this scenario is interesting to me. Big breakout of the trend line. I'm not sure about the horizontal level. Is it real? Is there a level there? I'm not 100% sure. This is a very rangy pair, don't forget. And by nature, you'd be thinking, okay, we've come off the bottom. Maybe we're looking for the top here. And I'd have to agree with that. But that said, the range is probably in here somewhere. You could go down there if you wanted. That'll probably do. But every time we're looking for a range to, in terms of trading it, we're looking for lower highs and higher highs and higher lows. So we've got all of that, higher high here, higher low here, higher high here. But now we're looking for a higher low, and I'm looking for a retest of the break of that trend line or trade line, call it what you will. What I don't see is a huge confluence area there. That's not too dusty. Through here, it has been a little bit of support and resistance, but the level's not clear to me. But I think we are due for that, and I'll be looking to trade that short again. Why am I so keen? Well, I'm not so keen, and it won't be a revenge trade for last week. It won't be that. But look at what's happened at this level. We have gone into that range, and we've refused to go above last week's weekly pivot once, twice, 3 times. Make it 4 really. And the weekly pivot probably won't be too much apart from where it is. And it'll probably actually come down to here, I would imagine. So I'd love to see it get underneath there. The monthly pivot won't move. So we may go into a tighter range even still, which makes it even better for me. Because if we do, then this is the range that I'm talking about. So tops to bottoms, guess what? We've just come off the top again, and I'm looking for a lower high at that point. So like I said, it's very, very repetitive, my week as it starts tomorrow. But if 1, 2, or 3 of them pan out and set up, then I think I'll be okay. That's pretty much it, mate. It's going to be a range trading week for me. I'm very interested to see what happens with the Brexit scenario and how we trade out of that, but I certainly don't want to trade into it at the moment.
Yeah, mate, I think it's a fair call. We were saying earlier, mate, so you've almost forgotten that. So we got breakfast. We got breakfast.
Yeah, me too. About 12 hours away.
We got breakfast. Brexit. God. Look, I did something really unusual last night. Normally, when on the weekends, I start quite late and start my sleep pattern. But last night, I went to bed a bit earlier and got 7 or 8 hours sleep, which is neat. But today, I'm just wrecked now. So, it's just getting a bit later again.
Yeah, it's no good for you, that sleep.
No, I just stay on the pattern and go to sleep at 2 o'clock every morning.
Yeah, my mother always told me that, we'd sit down and have a few beers late at night, and she'd say, you know what? I felt perfectly well when I went to bed. It's that bloody sleep that wrecks you,
Now I've lost my Brexit. Yeah, Brexit. Look, we're on a joint announcement at Brexit by midnight Sunday night UK. Julian will be up at 1 p.m. New Zealand, 8 a.m. Singapore, having a look to trade that if it's around. We'll have to wait and see if it is around or not, but hopefully there'll be something there that is good for him. And, of course, we shouldn't forget the Electoral College votes in the US tomorrow as well. And we will get an interesting reaction to that. So Eurodollar, all of a sudden, I just have I hate saying this. I just have a sneaky suspicion that there'll be something unusual. I don't think that Trump's going to overdo Biden, but whether one guy doesn't vote the way he's supposed to will be really interesting, because that's a terrible statement on democracy in the US if Trump can create enough pressure on people to not post those votes the way they were voted for. In fact, at the same time, here's a guy who had the Russians help him get elected. Now complaining about electoral fraud. It's hilarious. But we have a lot happening at the start of the week, and what it hopefully will do is we'll get some news on Brexit, some news on the electoral college, and we'll get trend. That's what we always want. We want news that gives us direction, and then for it to continue on, and hopefully it'll do that for us and give us a really good week ahead. We're going to wind it up. We're 10 minutes away from our staff meeting. We will have a staff meeting in 10 minutes, guys, and then from there we will have perhaps a chit chat. I want to have a bit of a quick chat with Leon tonight if I can as well, so I'm going to see if I can schedule that in as well. To everybody who's joined us today, thank you for your company. I hope you've enjoyed a lot out of the show. It is great to have your company. So have a good evening or morning or afternoon, wherever you are in the world. Have a good day and trade well this week. And remember, guys, just stay calm and make good decisions. If you do that, trading's a reasonably simple thing. Stay calm and make good decisions. Cheers, everybody. Thank you. Thank you very much to all the presenters. Thank you. We had Julian and Ashen today. We had Alexis. We had Lloyd. We had Shukri. We had Geoff. We had Ainslie. Thank you all for coming in and sharing your thoughts. It's much appreciated, guys. And to those that watched, I hope you got some really good value out of it. See you all.